Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, let's take a look again on the euro currency. Well guys, market's a bit lazy at the eve of Thanksgiving, maybe except the crude oil, because on the crude oil we will get the OPEC meeting right on the Thanksgiving day, and that's why the crude oil market is really active, and crude oil is continuing to drop lower. But on the forex market, currencies show some action, but this action is a bit not very fast and mostly gradual. The same we have on the euro currency. But on the euro currency, as a result of the closing of the previous sessions, we've got one detail on the daily chart, and this detail is the bullish stop grabber. So you can see that market has formed here the bullish grabber that potentially, if it will work, it has the minimum target right here, right at this top. So market should clear out this top and reach probably the monthly pivot point that has been tested yet in the area of daily overbought. But I would like to remind you that at the same time with this candle down, this plunge on Friday, we've got the weekly bearish stop grabber that potentially should lead market to taking out of these lows and to continue move lower. Besides, we have here action that's more specific for the retracement. Market has continued move down with a solid plunge, so you can see market open on the top, close at the bottom. Also, this could be treated as the reaction on the 127 extension of the bottom lines. Next target stands at here. 122.64 is 1618 extension of the bottom line. So theoretically, market should continue move lower. But as we have some contradictory factors, we should get some clue on the intraday charts what stake we should make, because as this pattern is still valid, it keeps chances on the further upside action. And in fact, theoretically, this pattern will be destroyed only if market will take it out with these lows. In general, usually it treated as it's common practice that the higher time frame patterns treated as the stronger than the lower time frame ones. And from this standpoint, we probably should think that weekly pattern is stronger than the daily, and probably it will overrule it, and market theoretically should continue to move lower. But probably we should add some more details in this expectation and take a look at some intraday situation and some patterns that could give us more confidence with this thought, that could confirm this or deny this. Anyway, we should keep an eye on the intraday action and to see what will really happen. Maybe market will shed some more light on the situation and we will understand what's really will happen. On the 4-hour time frame chart, I just drawn this ABCD pattern that could become a reality if market really will continue move for this grabber on the daily chart, because particularly by this ABCD pattern, market could take out of these highs. But I have some doubts about this possible action by some reasons. First of all, take a look at these candles. This was really indication of the trend on the market. Is really very significant plunge, significant sell-offs on the market, with very minor retracements that has happened on this downward action. Okay, here we could find only maybe one candle to the upside, but in general this action is very choppy and deep retracement. So you can see move up, the half of the way move down again, almost the same distance, almost totally denied this upside action. Here is even greater retracement. Here again, this long candle has been cancelled with a big part of this downward action. It's very choppy, and this is really mostly looks like the retracement. And here again we have the solid plunge on Friday. Now again gradual action. by taking a look at this picture, it seems that the market really the bears are still so strong, and the sell-offs on the market is really significant. Okay, because any sell-off market demands from the bulls the significant strength to at least partially compensate this previous move down. And it makes me think that in the current situation, the chances on the downward action seems to be more preferable than the upside action of this ABCD and taking out of these highs. On the hourly, but currently, guys, we have some clue that we probably should monitor today and tomorrow action. So if we take a look at the hourly chart, we will see that we have a couple of moments. First of all, we have the Gartley's triple to sell pattern, so thrust down, ABCD retracement. This is the Gartley pattern right at the 618 fib level. From the DiNapoli framework, we have agreement. So we can see this ABCD pattern that has been completed right at the 618 resistance. That creates a bearish agreement, if you could call it, in this manner. The point is, agreements are stronger than just a simple fib level, and very often, if this is really just a retracement, very often the agreements become the end of the retracement and the starting point where a trend could be reestablished to the downside. That's why this level is some sort of the beacon. In the common situation when the market stands in retracement, in most cases it will not pass through the agreement and will find some real barrier there and really could reestablish the downward trend. But if market has something else, and if power is still significant to the upside, it could show the breakout through the agreement. In this case, it will be quite another tune. It will mean that the reality of this stamp grabber is really worth our attention. So the market will show retracement greater than the 618, and what is even more, it will pass through the agreement on the intraday charts and almost totally erase this thrust down. It will mean that chances on the appearing of this grabber, working of this grabber, are really not as small as it was seemed on the first glance, the first view. That's why, guys, I call you today watch for this area and see what will happen. If market will show the plunge down, return right back down below the weekly pivot point, reestablish this downward action, it will mean that probably the weekly stop grabber is dominating right now, and probably market still mostly should continue move to the downside. But if market will start to coil here and will show the breakout through this level, it will be the action in favor of this possible ABCD and in favor of the possible grabber on the daily time frame chart. That's what we probably should be focused today, and this probably will be this is in fact the clue that we have right now, because nothing else we have here. Yes, probably you could draw this butterfly or something on the 15-minute chart, but the major point here is this agreement, area of agreement resistance. Depending on what we will see around it, whether the market will fail here, turn down, or will break it to the upside, this will probably determine the further action in the short-term perspective on the EUR.